Good morning, everyone, and thank you for joining us. I'm Tom Bracken, President of the New Jersey Chamber of Commerce. I want to welcome you to this morning's webinar that's going to be focused on an important financial support program called the Equitable Small Business Initiative. In a few moments, I'll turn the webinar over to my good friend, John Harmon, the President and CEO of the African American Chamber of Commerce of New Jersey. It is his chamber that created the Equitable Small Business Initiative. Before I turn it over to John, I'd like to explain that this morning's joint webinar is part of a series of activities resulting from a memorandum of understanding that our two chambers signed exactly 1 year ago yesterday. The MOU committed our chambers to work together to address the economic inequities facing Black citizens and Black businesses in the state of New Jersey. Today's webinar is one example of our joint work. Both chambers and their boards of directors have used the last 12 months to create a series of programs with some very specific and targeted goals. These goals include increasing the number of Black business executives serving on boards of directors, identifying investment, mentoring, and recruitment opportunities for Black-owned businesses, creating good corporate citizen programs that positively impact the social and economic standing of African Americans in New Jersey. Also this fall, the two chambers will jointly host a trio of receptions that are free to attend and you are welcome to go to and very much invited. At these receptions, we are going to celebrate some of the very special people and organizations who have advanced the cause of diversity and inclusion across New Jersey. In November, we will cap the celebration of the diversity champions with a reception and dinner at the Pines Manor in Edison. We hope you will consider attending any or all of the events. We just posted a link in the chat box that will connect you to more information about these events and provide you the opportunity to register for any of them. One last item before I turn it over to John. As is the case with all of our webinars, if you have a question, please submit it through the chat box, and our speakers will try to answer as many questions as possible after the formal presentations. So without any further ado, it is my pleasure to introduce John Harmon.
All right, thank you, Tom, and all of you who have joined us today. You know, Tom kind of highlighted our efforts to really improve the overall competitiveness of New Jersey. I've had the privilege of knowing Tom Bracken for a number of years, and moreover, serving on the board of directors at the New Jersey State Chamber of Commerce. His team of professionals come to work every day with a commitment to make a difference. You know, today's program is critically important as we slowly try to address this pandemic. I started to say come out of this pandemic, but it's like never ending. But nonetheless, you know, we've had a lot of turbulence in the past couple years from a civil unrest perspective, and also economic challenges that have hindered a lot of small businesses from reaching their growth, their optimal growth potential. But through this initiative that we've launched in partnership with our good friends over at New Jersey Community Capital, we believe that this is an opportunity for not only for these businesses to access capital, but also get the requisite technical assistance that's much needed to help them to execute their business plans. Our partnership with Wells Fargo and my man JT, you know, I think is equally exciting. They also put a significant amount of resources behind this initiative. So in sum, what we do here at the African American Chamber of Commerce of New Jersey in partnership with New Jersey State Chamber of Commerce is we advocate for increased access to opportunities, a level playing field, and also to make sure that regulation not become a barrier to businesses like those that are here today reaching their goals and objectives. On yesterday, the Lieutenant Governor, our acting governor, Sheila Oliver, signed into law the Urban Enterprise Zone program. And this is a lot of resources that are available at the community level for many of these businesses. So I would ask you all to to inquire with your local municipalities, your county government, to see if your town was one of those that is a part of this initiative. And so in sum, this is all about making New Jersey more competitive, getting more businesses like yours in the economy in an equitable way. So without further ado, I am privileged and honored to introduce Phil Woolfolk. He is the Chief Operating Officer here at the African American Chamber of Commerce of New Jersey, and he's running the point on this initiative in partnership with New Jersey Community Capital. So Phil, I'll turn it over to you. Look forward to hearing what you, Marie, and the others have to share today.
Thank you very much, John, and thank you very much, Tom. Happy to have the two leaders of the African American Chamber of Commerce, both the African American Chamber of Commerce and New Jersey Chamber of Commerce, available to make some opening comments and get us started today. Before we get into the meat of this presentation, I'd like my co-panelists to be able to introduce themselves. We'll start with Marie. Marie?
Yes, good morning, and thank you to the Chamber, New Jersey State Chamber and the African American Chamber for giving us this opportunity. I'm Marie Masherin. I'm Chief Operating Officer of New Jersey Community Capital. I'll wait for a little while to introduce New Jersey Community Capital and what we do as we get into the program. So thank you, Phil.
Thank you, Marie. Next up, Dave.
Thanks, Phil. Good morning, everybody. It's a pleasure to participate in this. My name is Dave Langley. I'm Senior Underwriter at New Jersey Community Capital, so I do the credit analysis for the bulk of our small business lending, including many of the loans within the ESBI program.
Thanks, Dave. And Jose from Wells Fargo.
Hello, everyone. Thank you for having me here today. My name is Jose Taveras. I do business development for Wells Fargo, and I located in Central. And I just want to say thank you, and thank you for inviting me to this panel, and looking forward to answer many questions and share with you what we're doing here. Well, thank you, Phil.
Thank you very much, Jose. And now we'll go back to Dave and let him set the foundation for the Equitable Small Business Initiative. Tell the audience a little bit about the program. Can we have the slides, please?
That's great. Thank you, Phil. So New Jersey Community Capital has been doing small business lending for most of its existence. We really upped the amount of small business lending that we do in 2012 as a result of Superstorm Sandy, when a lot of affected businesses were suffering from cash flow issues. And gradually over time, we've increased that amount to the point where small business lending now takes up about a third of our outstanding portfolio. Through our partnership with the African American Chamber of Commerce in New Jersey, we launched the Equitable Small Business Initiative just a few months back. We've taken in a couple dozen applications and already approved several $100,000 in loans, but we're always looking to do more. We basically, the ESBI program is divided in essence into two kinds of loans. The first is are what are called pandemic relief loans. We go to the next slide. This was a result of the coronavirus pandemic, and a program we launched shortly after it began to cause the lockdowns that have affected us all. That program was called the Garden State Relief Fund, and in essence, what it was designed to do was to get fast, flexible capital to small businesses and nonprofits throughout the state of New Jersey to help meet payroll, pay rent, pay for utilities, in some cases equipment, but mostly the kinds of working capital expenses that businesses that were forced to shut down were unable to access without loan funds. So in essence, this is an expansion of things like, or an additional resource over things like the PPP, the Payroll Protection Program, or the EIDL program. The way that this is structured is essentially it's for existing businesses with at least $20,000 in revenue. They are loans, they're not grants, but the interest rates are extremely competitive and the repayment is extremely easy. You get 6 months of no payments upon approval of a pandemic relief loan through ESBI, then 6 months at 3% interest, and then 24 months to pay down the balance. And these loans between $10,000 and $75,000 of cheap capital. Like I said, they can be used for payroll, they can be used for other working capital expenses. We're pretty flexible with the underwriting. The policy guidelines call for a minimum credit score of 625, but we've approved loans for under that. We just sort of want to know, as a nonprofit lender, we can be more flexible than a bank, but we do want to know if there's, sort of a story behind a low credit score, if there are delinquencies. And obviously with the coronavirus pandemic, some people's credit scores have been dinged for reasons really, beyond their control. So those are the pandemic relief loans. We've also, and if you go to the next slide, we also increased our lending through what are called growth and operational loans through SBI. These are more traditional sorts of small business loans that are available to minority-owned businesses and nonprofits, which are intended to allow these nonprofits and small businesses to grow. These can also be used for working capital. They can also be used for equipment. They can be used for commercial real estate, refinancing of high-interest credit card debt. These are structured more like traditional small business loans in that they're typically, the terms are up to 60 months. We've gone longer than that on the amortizations on equipment loans and on commercial real estate. Again, we can be flexible on credit. We look for businesses that have a growth plan that's been significantly thought through. We do look for at least 12 months of operations, although we've funded a couple earlier stage businesses and we have the room to do that. We really want this to be flexible capital to minority-owned businesses that cannot gain access to traditional resources through the private market. We view this as an alternative to taking out a bunch of credit card debt, taking out a bunch of friends and family debt or high interest fintech debt through an online lender. And the other great benefit of this program, of course, is our partnership with the Chamber, and I'm sure Phil will talk a little bit more about that. But really the idea is that this is a comprehensive resource where the Chamber can provide small businesses with technical assistance, assistance in applying, assistance in putting together a business plan, assistance in thinking through how best to grow the business. And then once all of that is done, we see the application, we work with the Chamber, we try to come up with a loan structure that's going to be flexible, useful for the small business. And then, although we're still in early days with this program, the way that it's designed is such that we in the Chamber are with you all the way. We're a patient lender, we're a comprehensive lender, and the Chamber is providing technical assistance throughout the program. If there's an issue with repayment, that's something, we're not immediately going to call a personal guarantee or, take an asset that was securing the loan. It's something we in the Chamber will work with you as a small business owner to get through. And that's, in essence, how it was designed. The interest rates are a little bit higher than with the pandemic relief loan. We're typically 5 to 10%. That's, subject to all the credit analysis that we do. The things we look for are the things traditional banks look for in terms of underwriting, even though we are flexible. So we look at personal tax returns, business tax returns, and typically it'll take personal guarantees from any partners with 20% equity in the business or more. With what we've done so far, we've done some service sector businesses, food service businesses, but we're looking to expand our lending in this area. Of course, that's why we partnered with the Chamber on designing this initiative. That's all I have. I'm looking forward to taking any questions on the more technical aspects of the underwriting process, but that's sort of the 10,000 feet above sea level look.
Thanks a lot, Dave, for that overview. What I'd like to add to that is that I had really the honor and pleasure of working with the New Jersey Community Capital and their team. Maria and I got really into the weeds on a lot of the foundational pieces and the infrastructure of putting together this Equitable Small Business Initiative. So I'd like Marie to take a few minutes to share a little bit more about New Jersey Community Capital, the partnership, and also a little bit about the funders who have made this possible in terms of the contributions that have been made to provide the capital that we're using to make the loans, and also to provide the technical assistance. Marie?
Sure. Thank you, Phil. Just to take a step back, New Jersey Community Capital is a New Jersey-based community development financial institution, CDFI. We're certified by U.S. Department of Treasury, and we've been in existence since 1987. And our mission is to create thriving communities through strategic investments and knowledge. And we take a comprehensive and holistic approach. We believe that building stronger and equitable communities by investing in people and places, the whole society benefits. So we felt in conversation, our former president, John Wayne Meyer and John Harmon have been long associates, and they started to talk probably back in 2020 about the need to really bring together and the importance of making capital available to minority businesses. So through the conversations, Phil and I began a conversation of what that looks like as a partnership, what the chamber's strengths and what they bring to the table. New Jersey Community Capital is primarily a lending institution, although we have other lines of business. But our strength and our really our history has been in providing loans for community revitalization. So we came together. And then as the events of 2019 and 2020 unfolded, we were lucky enough to have two funders, Wells Fargo, who supported the initiative with a $2.5 million grant to support this initiative. Also, the Pascal Sykes Foundation invested another $1 million. And through some other funders, we've raised nearly $5 million to support this initiative. And most of that will go out in loans to minority-owned businesses. Phil and I are continuing to work through it. It is a work in progress, we admit it, and we've been refining it. We see the chamber's strength as being access, being able to speak to the businesses, access to the market, providing the upfront technical assistance. And it ranges from, how to complete a loan application to more detailed, whether it's bonding or more detailed growth, someone who's in maybe a home business that wants to take it, transfer that business to a commercial site and expand. The chamber can provide all of those services. What we bring to the table is really, as Dave mentioned, total flexibility in terms of figuring out how to help the business. As Dave said, we do have criteria, but we are able to work within that criteria. Credit scores is a perfect example. We have a criteria, but we are willing to listen and accept exceptions to credit scores, exceptions to situations, as long as we can make it work. Really with Wells and with Pascal Sykes, I don't think this initiative would be as successful as it has started to be and will be in the future. So Phil, thank you.
Thank you very much, Marie. And on that, I think what I'd like to do is just for the audience, for the folks who are listening in, some of you may be in a position where you're eligible for the Equitable Small Business Initiative. There may be others who are looking for larger credits and things that may fall outside of the Equitable Small Business Initiative. So with that, I'd like to have Jose maybe chat a few minutes about what he does at Wells Fargo that may be able to help and support some of the businesses that may be out there that are looking for something over and above what we do for the Equitable Small Business Initiative. Jose?
Absolutely. Thank you, Philip. I don't know if you could hear me. I have some problems before. Can you hear me?
Oh, yes, we hear you fine.
All right, perfect. Well, again, thank you for allowing me to talk in the presentation. Here in Wells Fargo, I do small business development. I've been doing this for about 3.5 years, but I've been with Wells Fargo for about 15 years. And what we do in Wells Fargo Business Development is help to acquire business relationship in the ranges of 2 to 10 million in annual sales. Now, with that being said, I've been working also with a lot of startups and also with a lot of also nonprofits. And we're able to, even though they are not at the 2 million mark, or if they are the 2 million mark or more in annual gross sale, we're able to help them not only with the lending portion, such as unsecured and secured lines of credit. Also, we are one of the preferred small business SBA lenders, where we can do things such as stretching a loan for the SBA up to 25 years. A lot of the lenders are not able to stretch it for 25 years. So that's a thing that we're doing. We're seeing more and more an increase of businesses acquiring commercial real estate, and we're able to help in both ends, not only as owner-occupied commercial real estate, but also as investment real estate. Last but not least, I want to talk about cash management. One of our strengths, not only on the lending side, is also on the cash management and fraud protection and payment processing. We have a lot of business owners, and I'm seeing myself having many conversations with business owners that have questions in regard to cash management, such as wires, ACH, credit card processing. Sometimes we see for the lending part and the capital part, but there are many things that we can do as owners to keep our house in order in regards to cash management, in regards to payment processing, receivables and payables. So I invite everyone that is attending today as a business owner to go back and take how that process is working for you about making and receiving payments. And if you want to have a conversation, I'm sure, Philip, that my contact information can be shared with the audience. And if you have any question and would like to have enough conversation, feel free to reach out. I always say that a second opinion doesn't hurt. And also you can actually use what you're having now based on what us and other banks can offer in regards to payment processing and cash management. And again, just compare apples to apples, see what works best for you. But again, just here as a open resource to you, no matter who. If you want to compare things or have questions, feel free to reach out. We're more than happy to jump on a video conference like this one, or a phone call, or we actually can meet face to face if you like to. So again, that's what I have, Philip. Thank you very much for allowing me to talk here.
Thank you very much, Jose. So just for the audience, just to reiterate, the Equitable Small Business Initiative and our partnership with New Jersey Community Capital, our main mission is really to provide access to capital and technical assistance to really help businesses be able to be more profitable, sustainable, and grow. And our objective with that growth is that you grow eventually beyond the capacity that we have to lend in terms of the dollar volume or the dollar amounts of loans that we lend, that once you grow beyond that point, we're in a position to then refer you to our banking partners for those larger credits as your organization grows and gets to that point. So with that, we'd like to open it up, Ray, to questions. Do you have any set there for us?
Morning, Phil. Can everybody hear me all right?
Yes, Ray.
Good. All right. We did get a couple of questions in advance, but I've got one from one of the participants on the call this morning, so I thought I'd lead off with that one. And the question is, can these loans be used by someone looking to buy my business?
Looking to do what?
Looking to buy my business. In other words,
I see.
Can the funds be used to buy a business?
Oh, very good. You want to take that one, Dave?
Yes, absolutely. And they can. It's not the most common type of loan request, but we are certainly able to underwrite it. This was a little bit before we launched ESBI, but we did a nice deal in Newark at a certain point where we were able to finance somebody who'd been working in the business at a delicatessen to purchase the delicatessen from the owner who was retiring. In cases like that, we'd look at the financials, the historic financials of the business that's being purchased, as well as the personal financials of the person who's purchasing the business. So it might take a little bit longer. It's just a little bit more intensive underwrite, but we'd be happy to look at that along with the chamber.
Very good. Thanks, Dave. What else you have there, Ray?
All right, just got another one in. Question here, and it's probably for Jose. What is the maximum amount from Wells Fargo for commercial real estate loan?
Commercial real estate,
Okay.
the ways that we do it is if we do it through business real estate financing, or we abbreviate as BREF. BREF is a tool that goes $1 million for both owner-occupied commercial real estate or investment real estate. Now, owner-occupied commercial real estate, if it's over $1 million, we're able to use SBA. And in those cases, we are able to go up to $5 million. Now, there are other lines of business above mine, such as commercial bank and middle market. So when a property is over $1 million in commercial real estate, then we refer to those line of business. So we really don't have as a bank, but my specific line of business goes to 1 million for conventional. And then on the other hand, we could use SBA.
Very good. Thanks, Jose.
Yeah, and Phil, if I could just add, New Jersey Community Capital as a CDFI also has other lending products to support the SB and the Chamber's activities. So we have the capacity to do real estate loans for owner-occupied businesses. Most investment type real estate, quite honestly, we'd want to see a mission fit as to how an investment in real estate is going to contribute to the overall improvement of a community, and whether that supports jobs in the community, provides services to residents, whatever. We also do a tremendous amount of affordable housing development and preservation of affordable housing. And we have, in fact, supported minority real estate developers who are looking to, develop, whether it be scattered site, single family. So we do have, and we can work with the chamber to accommodate those borrowers.
Oh, very good. And to that end, Marie, we've had some discussions about the smaller developers and scattered site development. Would you like to go into the weeds a little bit on that?
Sure. So we have from time, we do actually from 1987, when New Jersey Community Capital was created, our sole purpose was to fund the development and preservation of affordable housing. So our lines of business on the lending side has really expanded, and housing has always been a core principle for us. It's a core competency for us. We understand and can work with the nuances of subsidies, which is a lot of times embedded and provided along with affordable housing. So if you're working in a city or a community where you have CDBG dollars, home funds, affordable housing trust fund dollars, we know how to work within that structure and help you create affordable housing in a community. Dave has worked with a lot of single developers who may be just starting out. We've done loans, real estate development loans, I think as small as maybe $100,000, $150,000. We've incubated quite a few developers who started out as contractors and slowly worked their way into becoming developers and have moved forward. So, again, the patient credit, the patient underwriting, talking with the developer, talking with what you need, understanding that when you own real estate, you have to manage it. And it's not just, building it, but you have to manage it, you have to maintain it. And we're also looking for folks to create healthy, affordable housing. So taking older housing stock and getting rid of health environmental issues, whether it's lead paint, efficient HVAC systems, new windows, making that house healthy and affordable for tenants or homeowners is really a critical aspect of what we'll look for as well.
No, very good. Thanks a lot, Marie. What else you got there, Ray?
I do have another question, but before I get to that, I thought I'd just look for clarification from someone who sent in a question about community capital. So is community capital actually considered a bank?
We are not technically a bank. We are not a depository. We are not. So maybe we should say what we're not, and then that'll maybe. So we're not licensed by the state of New Jersey or the federal government. We are a nonprofit. We are a 501c3. We are not a depository, so we don't take in deposits, and we do no consumer lending. Having said that, there are CDFIs that are also banks. And so CDFIs can be banks. They can be licensed as banks. We've just elected and operate and we've chosen not to be a bank. But we are what's called a community development financial institution. And that's a designation under U.S. Department of Treasury. They have a CDFI fund. And we raise our funding. But most banks take in deposits, turn it around and lend it out. We attract our investments through grants and capital, like the investment from Wells Fargo. We also, individuals, socially conscious investors, whether it be corporations, foundations, insurance companies, and the government and the state of New Jersey. EDA is a good partner of ours as well. So we aggregate all of those funds and then deploy them out into the community. As a CDFI, we are required to invest in low-income communities within our market. So we are charged with working within specific communities within the state of New Jersey.
Very good. Thanks, Marie.
Thank you, Marie. Phil, the next question I have is someone who's asking, can the loans be used by someone who has a life insurance business?
You want to take that one, Dave?
Sure. Yeah, I think we'd be open to it. I think we're basically open to any type of business with the exception of what are called quote unquote sin businesses. So businesses that are directly related to something like gambling, for example. And that's just based on our CDFI designation and the policy guidelines surrounding our sources of funding. So they can't be used for that. But we're more or less agnostic. If you're running a small business, you're creating jobs, you're paying taxes, we're, we in the chamber are happy to take a look.
Thanks, Dave.
All right, next up, it's kind of a little bit of a lengthier question, so just read it directly. This participant says he or she is in the process of responding to an RFP with my municipality as a developer of a mixed-use affordable housing project, estimated at 25,080,000 total units. Are there opportunities with your organizations to this end?
What do you think, Dave?
I'm not sure I completely
So
understand.
Dave, yeah, let me take that if you don't mind.
All right. All right, go ahead, Marie.
It's a Marie question.
So the short, perhaps is the answer. Because it requires it requires a more detailed conversation, right? We have done it in the past where we would provide, essentially, we would provide a non-binding letter outlining proposed terms of the loan should the participant be successful. We are not going to give a hard binding loan commitment because there's just too many unknowns really at the time of responding to an RFP. But we would consider, after talking to the applicant and going through, we do have to do some underwriting ourselves because quite honestly, we're not in the business of putting out non-binding term sheets that we can't fulfill at the end of the day, right? So we have reputational risk and we want to make sure that if that applicant is successful, that we in fact can help them. So we can do it. There may be a cost to us issuing that non-binding term sheet. It's usually a couple $1,000 just to kind of compensate us for our time. But, you feel free to contact Dave or myself and we can put you in touch with our director of lending. We have done it in the past. My best advice is probably if you have an institution where you've gotten real estate financing from before, you may want to start there because they know you are ready and they may be willing to issue a non-binding term sheet.
Great. Thanks, Marie. I actually recognize the name there, and I think we'll be having some conversations with that gentleman. Thanks. What do you got next there, Ray?
Next one is we have a developer who's in the process of building 3 new houses. And so what is the maximum loan or the maximum amount of a loan for this company?
This sounds like an LTV question. Dave, you want to fill that one?
Sure. Well, Marie touched on our developer line of credit program, which allows for scattered site. I mean, first of all, I'd say criteria-wise, it does have to be affordable housing. So we won't just fund any housing development through this program. In terms of LTV, we'll do up to, generally speaking, for-profit developers, 80% of the complete appraised value of the subject property. So prior to, we can get an approval at our credit committee for up to X dollars or 80%, whichever is less. And then we pull an appraisal, see where it comes in. So we can fund, both acquisition and construction or renovation if it's a rehab. In general, our developer lines of credit go up to $500,000. That, like many of our criteria, is not necessarily a hard and fast rule, but generally they go up to $500,000. After which, the project development is completed, we can either term out that loan through a subnote structure. Or if the property is being sold for affordable housing, then the line gets paid down and the funds can be revolved again for another project.
Very good. Very good. Thanks, Dave. Ray?
All right. To follow up on a comment Dave made before is a question I'd like to ask, which is, are there particular kinds of businesses that are better suited to these loans than others?
I would say, if this is directed to me, not really. I mean, different industries obviously have different challenges, and we have a fairly wide breadth of experience in terms of the kinds of industries we finance through our small business lending products, including ESBI. We do get a lot of requests for food service businesses, other service sector businesses, hair salons, film production studios. We do get some contractors. Contractors are always a little tricky, although we've managed to finance a number through our the developer line of credit program, because there are often efficiencies to be gained when you are, in fact, a contractor and you're doing residential real estate development. We were looking the other day at the pandemic relief loans that we have funded more broadly throughout the organization, just to get a sort of cross section of what kinds of industries we've been into. And it really does run the gamut. About a quarter of those loans are in food service, maybe 10 or 15% in the other service sector businesses. We do a number of childcare loans, early childhood education loans. We've done a number of those. We have a little bit of additional expertise in terms of what to look for that kind of financing. That kind of small business lending goes back a little bit further in terms of our organizational history. But really, I mean, like I said before, aside from those very specialized kinds of SIN businesses that we can't do, we're really agnostic and happy to take a look at anything.
So Ray, maybe we should talk about what the SIN businesses are. So any business that is illegal at the federal level, which the first thing is the cannabis industry in New Jersey. So we really cannot finance any business that would have a product or associated with a illegal at the federal level. We don't do any gun shops. We can do a fitness center, but we can't do golf courses. Can't do spas, but we can do nail salons, and nail salons that offer spa-like services. It gets a little tricky, but we've done those. I'm trying to think off the top of my head. No ammunition, no production of firearms, golf courses, fitness centers we can do, and any kind of gambling, racetrack. I think those are kind of the big ones. We have a list if you need it, we can make it available. But those are probably the big ones.
I'd add just we can do we've done a couple breweries and distilleries as well, which could be viewed through some eyes as thin businesses, but we're able to finance those, and we've had some success.
But I don't think we can finance a liquor store.
Not a liquor store.
Actually, that's the distinction. We cannot. I believe we cannot do a liquor store, but we can do distilleries, breweries, and the like, which is kind of unique. But
All right, thanks, Marie. Anything else there, Ray?
I got one more that came in earlier. So one of the thresholds for the loans is it's for companies that are located in New Jersey. So what is the threshold for what qualifies as located in New Jersey? It has to have a physical building present here, or just employees in the state are enough? What can you clarify the threshold a little more?
You want to take that, Dave?
Yes, you have to be registered in New Jersey, and you have to have a business address in New Jersey. We have financed some businesses which have a presence in multiple states, so long as they are they have a business presence in New Jersey. If you have any questions about a specific, your own business, you can email me or the chamber, and we're happy to give you a quick answer on whether or not you'd qualify based on where you do business. But we are a statewide CDFI. We lend all over the state, but we are a New Jersey-based CDFI, so we're exclusive to businesses that do business in the state.
I Phil had one more that just came in a couple minutes ago. What are the red, yellow, and green light scenarios for loan applications?
I don't understand that question. Does anyone on the call?
I think they're thinking about what would make us absolutely not do the loan, being red. I assume what would yellow be a warning sign, and then what's the sweet spot, it being a green. Is that, I'm kind of thinking, is that what you think?
I think that's a good path to go down for the check.
Okay, Dave, you want to handle it?
Sure, happy to. Well, obviously, in terms of red, what we discussed just a moment ago, if there's an issue with the geography of where your business is located, or if you're in one of those select industries which are not eligible under our federally imposed CDFI guidelines, then obviously we can't do the loan. If it's after that, we like Marie said, we try to be flexible, and we try to work with the chamber to find if there are ways to do a given loan, particularly within this program, which is supposed to, greatly expand the amount of available capital to businesses that can't otherwise necessarily access affordable capital. So, given that context, a startup that there's a business plan, but the owners of the business don't have any experience in the industry, and there's no other equity that's going into the deal, that would be something where I think early on in the process, we would say, we'd like to help, but there has to be just some more development in terms of the business and the management experience of the ownership before we can take a look at this. If it's just too speculative. There are also a number of early stage businesses that really would benefit much more from an equity investor. Our loan funds are exactly that. They're loan funds. So they do have to be repaid. And if it's going to take 2, 3, 4 years to develop positive cash flow, just because the business has to develop its intellectual property, or needs to just build the product if it's that type of business, that's the kind of startup we generally can't finance, just because loan capital is not what you need. You're going to have to start repaying the loan before you're generating cash flow. So we try to structure it as flexibly as possible, but that's something that's very difficult. In terms of yellow, we've really tried, and I hope Phil would agree, we've had a very positive partnership with the chamber in terms of being open about communication, to the applicants. And when there are credit challenges, that we try to communicate those credit challenges to the borrower as early on in the process as possible. And if there are good answers and ways to manage to finance deals that might not meet specific credit criteria that we have within the program guidelines that we can get past that. So Marie talked a little bit about, and I think I alluded to, the credit score issue. So you may have a credit score below 625, but perhaps that was related to some medical bills, for example, that came up. Maybe there was a bankruptcy, but it was 5, 6, 7 years ago. That kind of stuff can still show up on credit scores, but it's not a deal killer as long as we're able to communicate with the applicant as to what really happened, get a better understanding, and find a way past it. And then green light. So we really try to, make the program as efficient as possible. We have credit committees for ESBI every 2 weeks. I should mention all deals are subject to credit committee approval. We have some internal folks, some bankers on that credit committee who take a look at the credit memos we write, try to better understand the deal, ask questions, and then hopefully vote for approval. The process, I won't get too deep into the details, but basically, if we have 2 weeks of runway once an application is submitted and everything looks pretty good and the applicant is available and can answer questions, takes about 2 weeks to get a credit memo presented to credit committee, and then generally after credit committee, another couple days to get a commitment letter issued. Assuming there are no issues, then another couple weeks to get to closing. So you'll find, obviously every deal is different, poses its own set of unique challenges, but as long as, the applicant responds very quickly to our questions and, signs the necessary documents with relative speed, we're able to get a loan to closing, I'd say, maybe 6 or 7 weeks from application. I hope that's helpful.
Yes, very good. Yes, and I certainly would agree and reiterate that we've had tremendous amount of flexibility and good communications between the Chamber and New Jersey Community Capital, and it's gone a long way to be able to really help some clients that probably otherwise would not have been able to get their deals done in a traditional sense. Anything else there, Ray?
Kind of a sensitive question came in, but within the framework of the red, yellow, green discussion we just had, if a person had a criminal background, how would that factor into the loan process, the loan approval process?
Well, I think I'll let Dave answer that question, but before he answers, I'll share that I think our very first Equitable Small Business Initiative loan was done for a gentleman who had a criminal past, started and was growing a very successful business and employing and training some other folks with a similar history. You recall that, Dave?
I do. I was gonna mention that too, but that's that was a particularly satisfying loan in a number of ways. We are able to finance previously incarcerated individuals, and in that particular case, like Phil said, that gentleman made it. He wanted to run a successful business just on for its own sake, but also tried to employ members of the community who had been previously incarcerated as well, and that was quite wonderful.
Yeah, and I want to just add that New Jersey Community Capital, over its history, has supported, incubated, and really mentored individuals who have been incarcerated. They've done their time, they've come out, and they should be given every opportunity for a second chance. And those individuals set themselves up and for success. And, we put those individuals through the same underwriting. We actually don't take their personal history into consideration, or their previous incarceration into consideration in the underwriting criteria. We may want to know about it, and we may take a look at it but if the general underwriting works and we can get comfortable with the overall credit risk, we will and have done the loans.
Very good. So in the few minutes we have left, I think what I'd like to have is everyone, all the panelists, be able to maybe put in the chat how you can be contacted for folks who are on the line who may want to reach out to you outside of this. If you're comfortable with that, we can get that done now, and we'll field a few more questions, Ray, before we get off the line.
Yeah, Yeah, if we got a couple minutes, what I might suggest is, 'cause that was a good example that Marie and Dave just gave a couple of minutes ago. Are there a couple of other examples of businesses who've taken advantage of this program, say fairly recently, that you can share with us?
You guys want to talk about any deals that we've either closed on already or any that we've approved recently at the credit committee?
Well, I think the two we just approved on Tuesday are perfect examples. Both are women minority-owned businesses right now, right? Both are not startups. Quite honestly, one was moving from a home-based business, is moved into a small commercial space and has been able, it's a food business, has been able to get some shelf space in real grocery stores and needs to expand. Needed to get working capital to buy some equipment and buy inventory. So that's one. Dave, what else? I think that's probably one of the best.
Yeah, there have been a number, and the other one that was approved just the other day, actually a vegan food service business, which has one location in Clifton and another that they just recently opened in Hoboken and needed some financing for equipment. Had some credit challenges, couldn't get traditional bank debt, but we were able to help them out. That was approved, and we just sent out a commitment letter today.
Anything else there, Ray?
That's it, Phil.
Well, I think we've been able to include in the chat for those on the call some contact information. Feel free to reach out to myself or Dave. Love to entertain any opportunities to chat with folks on the call who are looking for opportunities for financing, some access to capital, and also identify areas where they may need some technical assistance to be able to grow their business and make themselves more sustainable. So thank you, Ray. Thanks to New Jersey Chamber of Commerce. This partnership between the Chamber and New Jersey Community Capital is a great one. We look forward to working with everyone, both organizations going forward. And thanks for all those who have participated today and brought questions to bear. Those of you that may have questions after today, please feel free to reach out, like I said. And thanks to all those folks working behind the scenes at New Jersey Community Capital and New Jersey Chamber of Commerce and the African American Chamber of Commerce of New Jersey. We couldn't do it without all of you guys who are, no one sees you in front of the camera today, but we couldn't make this happen without all the folks behind the scenes who do a great job for us every day. So thank you to everyone and have a great rest of the day.